What are breaker blocks? Breaker blocks are basically an order block, but inverse for the opposite direction. So let's go into some examples right away and showcase what that looks like. Here in this case, for example, the breaker block would be the last black candle before we had a change in state of delivery to the downside. So as we can see, we have a swing high, a swing low, a higher high, and then we have a close below this swing low, making this candle here be the breaker block. We then can look at some more examples like here, swing high, low, higher high, close below, making the black candle again a breaker block. It is not the up candle, it is the breaker block being the black candle. So down candles will be the breaker blocks for bearish moves, and up candles will be the breaker blocks for up moves. Here we have a swing low, a swing high, a lower low, higher high, making this the change in set of delivery, and also confirming that this yellow candle, which is an up candle, is our breaker block to the upside. The pattern basically looks like so. Sorry. Looks like that. Or to the downside, it will look like so. So basically, we're looking for this pattern. We're looking for a swing high, low, higher, high, lower, low, or a swing low, high, lower, low, higher, making this CISCs. Now, how do we utilize this and where can we find them the most? We're going to find this on true reversals or continuations after liquidity has been grabbed. So starting from here, we can see that this is 4 o'clock. This is 5:01. London session ends right at 5 a.m. Therefore, once we run this high, that's London high being ran and making a breaker block to the downside, confirming our change in set of delivery. And as we can see, that's what starts to move down. Here, we run relatively equal highs here in here. Once we close below here, we have a change in set of delivery. And as we can see, that's what makes the move down. We then have, again, liquidity being run here. This is 8 o'clock, which is Asia low. Here, gets ran, changes set of delivery to the upside, and then we have a move upwards. We then run this again. This is pre-market 8 a.m. Change set of delivery. Then we run downwards and we keep that for the rest of the day. So you're basically going to always find the breaker blocks be in those peaks and lows of price moving from point A to point B. You want to be pairing this with liquidity. Once again, like the first video explains, liquidity is the most important thing. We want to be looking for those highs and lows that actually matter in the market to be able to find the breaker blocks that also matter. For example, here we have relatively equal highs. We then run those highs. We have a swing high, swing low, higher high, lower low. We have a breaker. Now this breaker fails, right? We then run it one more time and we have a new breaker. And this breaker holds and we can see price drop after that. So it's not like every single time you will get the perfect entry and you won't have to re-enter ever again. But the more you do this, the more you're picking the right liquidities, the better your win rate should be getting. I will be expanding on how to utilize this on an actual model, as the breaker block is actually my favorite PD array for ICT. It is pretty much, in my opinion, the highest win rate PD array you can find. It holds the most weight when it comes to actual continuations and reversals.